JSW Steel, which remains in focus after the company's also announced its earnings coming through, where you've seen a drop in about as much as 22% in its EBITDA, and profits stayed largely in line. We spoke to the management of the company, the joint MD and CEO, Jayant Acharya, on the quarter gone by. This is what he had to say. Listen in.
So this quarter has shown very strong operational performance. Our volume, production and sales both have been very strong. On the volume side, we crossed 7 million tons, and that has been a very strong growth, primarily pushed by our new furnace in JVML, which has come on stream. Sales have been very good, aided by specifically India operations at 6.71 million tons. It grew by about 12% YOY. And domestic sales grew by 14%, again, the ever highest domestic sales. Although the prices did drop because of the China, I would say, dumping and cheaper imports coming in from basically different parts of the world, but we still could offset the lower realizations with a lower cost. And we were able to blend better product mix into our overall volume. So therefore, our value-added and special product sales went up, and that also created some positive realization push. And our efficiencies overall improved. So this basically played into the quarter EBITDA. On a quarterly basis, I think it's important to look at the recency factor. YOY is one part, but I think on a quarterly basis, our EBITDA on a consolidated basis went up by close to 3%. And on a quarter-on-quarter basis, PAT went up by 78%.
Well, so definitely, lower realizations offset by lower costs, as well as your outlook and what you achieved in this particular quarter with value-added products. So that point taken. The other part, I just wanted to, you referred to the China anti-dumping, any kind of duty that could have come in. Now, there has been a lot of dumping. In your presentation as well as press release, you mentioned that it's declined 10% quarter-on-quarter. But for the 9 months, the cheaper imports have increased 16% on a year-on-year basis. So just wanted your outlook on what's the current situation like, if because there has been, it's a key industry concern. Trade investigations have also, been speculating in terms of what kind of rate should be put on these cheaper imports. Any kind of conversations that you've had, and what is the current situation like?
I think what is important to understand is that there is a surplus steel available in China today. And that steel travels to the world, and we have seen a very high growth in calendar year 24 on exports, which is close to 120 million tons. Steel goes into, a major part goes into Asia, into various countries which have free trade agreement with India. And steel ultimately comes from China directly, and as well as from ASEAN, Japan, Korea into India at zero duty on top of that. So the rest of the world is putting tariffs, protection measures very fast, very quick. And I think the way the world is changing, it's going to increase in pace. India is vulnerable because we do not have any protection measures in place. I think it is important to have a level playing field. We are in touch with the trade investigation authorities. They have initiated measures on safeguard and anti-dumping, and the process is ongoing. We are hopeful that some results should be announced maybe in the first half of February.
Well, first half, definitely. And would a safeguard duty of roughly about 20 to 25% be something that's a minimum? Because that's the number that's been going around, and while there is a lot of speculation rife, do you see, as your opinion, as that should be one of the minimum duties to come in?
Well, I would say that the way the rest of the world has used the duties, and we have reference of that in America, we have it in Europe, we have it in some other countries as well. They have all implemented 25%, and I think that's something which we should look at.
Now, I just want to understand about production as well as capacity utilization. You did have one of the blast furnaces down in between October and November. Any kind of update on production? You did mention that it's one of the highest quarters in terms of production capacity, as well as going forward the outlook. Any update going into Q4 for the same?
Yeah, so we had a temporary maintenance at one of our blast furnaces in Dolvi. which has now resumed operations in November itself. But we did have an impact of that in our quarterly volume this quarter, in spite of which we did 7 million tons plus. Going into the next quarter, you will see a stable operations from existing facilities and the new facilities in JVML, which is the new 5 million ton furnace, that will ramp up quickly. Operations in Stream 1, that is Converter 1 and Caster 1s, have already started. Commissioned, the second caster has just started. And the additional ramp up at BPSL, which has taken place in quarter 3, and will also continue to support in quarter 4. So this will give us better volumes, is in a seasonally good demand quarter, which we usually see in quarter 4.
You also mentioned in your press release that a recovery in kind of government capex is expected in this particular quarter 4 between January and March, and you're expecting approximately 10% growth for this fiscal year. Do you see that happening already in the first roughly about 24 days of January? Do you see the because the capex projects have been something that's been watched out, and we are seeing new rollouts in road contracts as well in the end of December as well as November. Are you expecting that? Have you already started seeing that on the ground?
Yeah, so I can let me put it this way, that even if I see in the last quarter gone by, which is quarter 3, flat products were under pressure because of huge amount of imports coming in, especially in flats, whereas long steel actually held up well, and there the prices are actually improved during the course of the quarter. And that is primarily because of the projects which have now started coming on ground. And I think this activity or this pace will pick up as we go into quarter 4. So even the other thing to consider is that even in a, let's say, weaker month of November and December, even in the month of December, the overall demand in India was about 13 million tons. So even if you go by this rate, even by this lower rate, you will end up the year with almost 150 million tons of demand in India, which incrementally is 14 million ton plus. And that's what we had guided. By and large, that I think we would see growth in the range of 9 to 10%. And I think we are on the higher end of that. So we should be about 10% growth in India for this year.
Well, so that does answer the demand question. So you mentioned new capacities coming on stream, lower cost has been something that we're able to achieve this quarter and will extend to next quarter, of course. Better pricing dynamics compared to this quarter for Q4. So any kind of quantification that you can give us? What kind of margin improvement should we expect in quarter 4?
No, I think margin quantification is difficult to quote, but I think what I would like to say is that seasonally good demand, higher volumes from JSW because of our capacity ramp up, which we discussed. Cost will go down, and raw material cost we are expecting iron ore specifically to correct because there has been a correction in the international market as well. So I think we will see some corrections in the domestic as well. That should play into the cost. Coking coal costs have gone down in quarter 3, and we see a further drop in quarter 4. And we see lower import volumes because of, I would say, anticipated trade measures, which people expect. So that would play and support the margins. So volume growth and will support the absolute EBITDA, and lower imports, I think, and cost will also support margins.
Okay, there you have it. That's the management of JSW Steel telling us about how the quarters were panned out.